Welcome to Commodities, and here we're looking at the monthly chart on gold. It's not labelled, but look, I just want to point out a few things here. Is that this here is the top of a third wave, a fourth wave, and a fifth wave up through to here. The extension was in the fifth wave rather than the third wave here. So the situation here is that normally you would see this move back down to the wave 4 of 1 less a degree, which would be here. But when you get the extension in the fifth wave, it comes into this point here, and this is the other point here too, is that the 1 is the strongest number in the market, so the 1000 here, this market is likely to be drawn to the 1000. The other point is that with the levels anyway, is that we've got 13. Might just grab another line here that's got the price on it there. So basically we know that 1300 is the top of group 1, and we know that that is, becoming the resistance through here. The next level down, of course, is the 1200 and then the 1100. Now, when a market's moving down into group 1, it tends to bounce around a lot, and that would be correct too, because it would be in line with the Elliott count. And if we were looking at, you can look at this in terms of 1, 2, 3, 4, and 5, if you like. Whichever way you want to look at it, it doesn't really matter. The point is that in most cases, once you've got a third wave here, strong wave structure here, then the rest of it gets like this beginning here. It was sharp, but it's normally a bit choppy as well. So the fifth wave coming in from here will also be a series of fourth and fifth waves coming in through group 1 here. So it will tend to be choppy as well. But the main point here is that you need to understand that the market should drift lower. The levels 1, 2, and 3 here will create a choppy sort of environment. But yeah, look, it should be pulled to this number here and the top of the third wave here as such. That in mind, this is just the alternative count that we've been sort of working with as well here in the morning report. And that leaves that we can see that the retest of the 1250 is got overlapping wave structures, and we can look at that in a moment. But the main point is it is corrective. It wasn't impulsive, and I thought it could go back to the 1250 even a tad higher, but I think that it's sort of done its dash now at just below the 1250 here, with those overlapping wave structures in there, means that low there will be taken out. And the fifth wave down here, because the extension's in the third wave, we can look at this being, just with a pinch of salt, roughly the length of wave 1 here over to here. So we can look at that coming into the next level from, trading levels from after 5. The next level down is 3. Yes, the 4 is important and it'll play out, but in terms of ratio and expansion and those sorts of things, Fibonacci as price, then the 1230 is what we're looking at. And also that would be the top of group 1 as well, of the 1200, so 10, 20, and 30. So that will tend to be bouncy in here as well. It can bounce off the 1230 and go back to the 1240, but eventually, as soon as it sinks into group 1 here, then then it gets sort of pulled in there. And when the pivot here, the 1220 here, becomes the retested resistance, then it'll be pulled down to the next lower number, which will be the 1200 here. And this 1200 here, this is number 2 as well. This is also the pivot within minor group 1. So once this becomes the resistance here, then the market will be pulled down to the 1000. So it's just the way that the levels work, and they seem to work quite well. So it's something that we sort of, look at and look forward to. Okay, so that said, I'm just on the 5-minute chart here. The the move up through here. We can see from this high point here, close to the 1250 here, the midpoint, that the market is impulsing lower here. I haven't pulled it apart properly. I've just taken a bit of a rough guess at the wave count here, but it would seem correct. So if we do have 5 waves down through to here, we'd see an A and a B and a C wave try and get back up into, well, supply level here, and then move down from that point, down lower from there. So once again, the 1242, the 2 here being a pivot within group 1 as well. Once that becomes the resistance that we brought down to the 1240, and if it's at the 1240, it will move lower as well. The silver market, yesterday when we were looking at it, we understood that the move up here that we were looking at, moving up here, was corrective, because we could see that we had overlapping wave structures, and we had this as an A and a B and a C, but we're expecting it to retest 1900 here. It hasn't quite made it up here, and we've sort of readjusted the wave count as an A, and little A, B and C here for the B wave, and up for the C wave here for wave 4. So we can have a top in here, but I also must say too that this here doesn't appear to be 5 waves down through here. It doesn't kind of look it, but we do have corrective patterns into this point here. So we could have down for 1, back for 2 here, and working lower through here. The aim yesterday and today was to have the 1872 as a retested resistance, and then we know we'd take this low out through here. We'll take this low out anyway, but it could have one more test up here before it moved down. So I'll leave that with you. You could short it above this area here, but the safer bet would be the 72 as the retested resistance there. The copper market's fallen out of bed, and we were looking at this in terms of possibly a positive wave structure up through to here, and it could still be the case, but if the 310 becomes the retested resistance, it's moved through there, and moving through something or moving above something is important, but it is the retest that's more important. So, retesting the 310, 312 area, in that area there, and then, finding a resistance, it really sort of pins it then. And if that's the case, then we need to look at this low being taken out through here, which is going to have a pretty dramatic impact on, on the materials sector as such. To get overlapping wave structures, we would need to see the top of wave A here being breached here. So, a move through here would create this as the A, the B, and the C wave up through to here. So something to look at. So in terms of looking at this market to the downside from the top up here, we were looking at this as down for 1, ABC for 2, down for 3, across for 4 here. Now, I wasn't sure if this black wave 4 was in here and then down for wave 5 here. Not that it makes a lot of difference, but it could be, you could put wave 5 to this point here, and then have this as an A and a B and a C, but it doesn't really make any difference, because the wave 2 or the B wave up here would still be the same as such, and that would be pretty much the 60-odd% retracement level up to here. And now we're seeing this move down through here. Now, if it was a C wave coming, if all of this was an A and a B and a C wave here, then the C wave would normally be not so sharp. It normally more lazier than wave A coming down here. So it's probably likely that this is a wave 1 and 2 and a third wave moving down through to here. And as I mentioned as well, we need overlapping structures with wave A, and that would obviously take place in this sort of area through here. In counting down through here, I think that we're close to the low of the third wave here. For here, we've got the 1, 2, 3, 4, 5 for 1, back for 2, and this would be the 1, 2, probably 3, 4, and 5 to here. back retesting to the 310 here, but it can pull back to the fourth wave of 1 lesser degree, so the 1112 is possible. So we can see some sort of flickering across this range here before we'd see this as the retested resistance. And if we get this situation here, then we know that where we are a little bit more as well. But obviously it is bearish as such. So right, yes, look, just recapping that a little bit. So this is really going to impact on the resources and mining sector. The oil market, daily chart here, and looking for wave E to come down through to here in 3 waves, basically an A into B into C into the 101 sort of area through here. We also have to be mindful that, as I mentioned before, with group 1 here, 101, 102 and 103, if the 102 becomes the retested resistance according to the levels, then we'll see a move back to the 100 here. So we just need to be a little bit mindful of that. So it may come down further than anticipated, but at the same time too, the market is actually above the 102 area here, so it's still supported. Let's sort of move in here and have a little look at this here. This move down from the high here in reality can be counted in different ways. It could be counted as I've got it here in terms of down for 1, back for 2, down for 3 here, an A wave, a B wave and a C wave here, which is not such a good fit, but I thought it counted better as 1, 2, 3, and then an A and a B and a C here for wave 4 to here, and then wave 5 to here as wave A, and then a 3 wave move back to the 61.8 retracement level of this move down through here. So we'll be looking at another 5 wave sequence moving down into the 101 area through here, as wave C of E through here. So that's something that we can look at, but obviously the 102 is still going to offer a supporting role here as well. So the gas market, I feel, has got on the daily chart, we've basically could be moving this can be the low here on the daily chart, and we could be moving up to $5 here. But I don't want to just jump the gun yet. I mean, if I'd seen a nice clean 5 wave structure here, then I wouldn't hesitate of building in on the 450 here, but this does appear to be a corrective move here, so I'm a bit dubious of moving long into a situation where we're facing supply here, that resistance, sellers will be here, people have bought here, and as that market moves up here, those people that have bought here have a chance to to get out of the pain of the loss, so to speak. So this little move up through here, I'm sort of just been focusing on this little move through here, and there still seems to be a new high to be made here in 5 wave structure. So I won't bore you to death here on this one, but basically we've got wave 1, wave 2, 5 waves for 3, back for 4, well, that's back for 4 here now, and wave 5 up here. So within wave 5 here, there'll be 5 waves in wave 5 here. I can open this up here, and that's all going according to plan. You can see that we've got 1, 2, third wave still going, be a 4th and a 5th. So I really want this last these 5 waves in the 5th wave of the larger 5 to play out here. As I've mentioned a little while ago, that if we find a really nice support on the 465, because this is all group 2 area now, and once the market gets into group 2, it's a positive sign. It still can fail from the 72, but it's positive, just the fact that it's getting in there. And but so we'll look to go sort of long, depending on what we see here, but we would go long on the support of 72 there. So, I mean, of course, you can go long, right here, right now, but you'd want to keep the stop under the 450 here at least, because the 5 waves that we've been chasing to the upside or looking to the upside will need to correct as well. So anyway, let's just sort of plod along and allow this to unfold, and we need to look at it at the next level to see what we've actually got. The soybean market, on the daily chart here, we're just basically looking at the move up here as basically an A wave, a B wave, and a C wave here. Corrections are not always simple. There's a dozen different types of them, but in this case it looks like we're going maybe for an expanded flat in the 4th wave. An expanded flat would take the B wave 23% higher than this move here, and then as a trap, and then move lower here as well by 23%, catching the short traders in and then moving off. So we just need to be a little bit careful. We're looking for 5 waves down through to here from here, and they are unfolding in terms of 1, 2, 3, 4, 5 for wave 1, an A and a B and a C for wave 2, and then we're moving down into wave 3, which would likely be the wave 1 here, an A, B, C for 2, or an A and a B and a C here for 2, and then down for 3 here. Now, there is, as I mentioned before, there is support in group 2 here, 65, 72, and 80. Also, this little trend line through here is supporting it as well. So there is a lot of support here. So the idea would be, if you're going to add to the trade, is to see a nice clean breach of this support here. Stops above the 1500 here. But I think that, we shorted at 490, just below 490, whatever. But if the 490 became the retested support, I think we should exit those short trades at that point here, as such, because I know that this is corrective here. But at the same time, this move down through here, it's got 5 waves down to here, and it has given us another 5 here. As small as they are, we do need to see a breach here. So any build up of strength and too much time spent above the 480 and the 490 would actually sort of indicate a sort of sentiment to the upside then, because if the 15 became the support again, would have to be on that side of the market, on the long side. So I have no problems of doing that. So too much time spent in wave 2 here is an A and a B and a C here. Too much would create the exit. So a small loss is a good loss. So let's see how we go. But a breach of the 1472 here, look to add to positions here, because we'd be looking at a stronger wave down in terms of wave 1, an A and a B and a C, a little like this one here, an A and a B and a C here for wave 2 here. So this will be roughly the same, and it went a little bit higher here than this one here, so we can expect a little bit higher here. So something like this. So that would be a 3rd wave, 4th wave, and 5th wave, and that would just be the 3rd wave, by the way. You know what I mean? So a little bit sort of tricky within here, but let's see how we go. Okay, the wheat market, wheat and corn are still heading down. Now, wheat has covered the gap at 610, but it's still probably got more structure here to move down into. So I was looking at this here being the little 5th wave of a 3rd here. We're looking for the 4th wave to pull back to 620, pivot within group 1, by the way. So once that was support, now it's resistance, so it will move to the closest largest number, which will be this area here. So I still think there's a 3rd and a 4th and a 5th to come through to here, but still lower. We don't have the long trade set up there just yet. The corn market's the same as well. And I find this very difficult to count from this area through to here, down to here. There's overlapping wave structures, and it just, I can see some of it counts quite well, and an A, B, C here, and this the 3rd here, but then the 4th overlaps this one here, and so forth. But I think the way that I like to look at this is with the price, and it's got a certain pattern here where this level was the support, then it became the resistance. Next level, 65, became the support, then the resistance. The 60s become the support, then the resistance. So if you're knocking this down into the 450 here, then you could use the 455 here. So you want the 455 as the retested resistance here. We'll bring the stops down to just above the 460 here. Don't put stops at whole numbers because you'll only get stopped out. Yeah, so that's all on pretty much on track there. The coffee market has got once again, the 172 was the support, and now it's the resistance. So it does appear to be an A and a B and a C wave to here's wave 4. So we'll see a new move down into new lows here from wave 3 here. And I was looking at this from the 180 here in terms of down for 1, back for 2, and then down for the third wave here in 5 waves. So 1, 2, 3, 4, 5 for the third wave, the A, the B, and the C for wave 4. If wave 2 is simple and sharp like it is, then wave 4 will be sideways and complicated, but should drop down to the 165. If the 165 ever became the resistance, then we need to be looking down to the 150, but we'll look at the 160 in this case first. The weekly, as I mentioned yesterday, is moving into the oversold area, but the momentum is still to the downside. So by all means, you want to be on the short side here, not the long side. The sugar market is making new lows as well, and we'll probably find the 17 here as the retested resistance, and if that's the case, we'd probably see it move down to the 1650, the next level. That said, there is group 2 in here that will offer support as well, the 65, 72 and the 80 here, but I'd expect there'll be a fair bit of bouncing around from from 17 to the group 2 here. There's some support on the daily chart in this area here as well. So we can even get a bounce back up from here. So taking the lows out here, gathering more stops, and then pushing higher from that point there. But that won't interest us, because if it does come down through, when it comes down through to here, if support is found on 17, well, that will tick our interest for the upside, and so will 1730 as well, because we know in the bigger picture that the move sideways over March and April and May is corrective. Okay, the orange juice market is on track and is moving higher. So we've got, if I can just pull back over here, this is the previous high and this sort of high for a long time. And we've got this 3-wave price action here. So we can see the market moving up here now. So it will take this high out here. That's what we're aiming for. So we've set our target at 170, but we can have that at 172 as well. Now, all of this mess here. Now, what I've done here, I think, it may not be correct, but I think it's the best fit. And the best fit would be this up here as wave 1. And the structure for this here would be the 1, the 2, the 3, the 4 here, even though it overlaps wave 1 here. And then wave 5 up here with an extension in wave 5. So 1, 2, 3, 4, and 5 here for wave 1. As wave 1 here, wave 2 pulling back, to 61.8% roughly, and then we've got wave 3 up through here, and we'll be looking for 5 waves up. So we'll be looking for 1, 2, 3, 4, and 5, and looking at the extension being in wave 5 up here as well, so it could take us higher. The other thing here is that if this count here is correct in terms of 1, 2, 3, 4, and 5 to here, then the 38.2 retracement level here would come back in at 161 here. So this market from the current high here can pull back in a sideways sort of pattern here before we see further upside here. So we'll keep our stops at 156. You could probably move them up to 157, but we just want to keep out the way of any spikes like this sort of thing here, because they'll know that stops are under the 160 there. The daily's oversold up here, so this is 165 here, the bottom of group 2. So there will be, there will be corrective patterns across here. Will it be under here? Will it be above here? Will it be on both sides of the 165? How far will it pull back? These are the questions that we need to look at, but we shouldn't be affected by those situations either, because we'll need to have confidence in our wave count, and we'll need to understand that there will be corrective activity across here. So we need to keep the stop out of the way. If that's too much heat, then you need to reduce your position sizing. Let's have a look at the US dollar. Okay, the US dollar here is, still got nice support on the midpoint here, the 50, as you can see. And, it's built, I like a big correction, because a big correction is actually it's got many aspects to it, but apart from, the profit taking and stops being taken out and all those sort of, emotional things, the idea of a correction goes through an accumulation stage. So the wider the correction here, the more accumulated positions are bought, and further upside. So the bigger the correction, the bigger and the safer the next trend to the upside. So this is still moving to the upside here. Alrighty, that's it. Cheers.